I'm Priscilla Barrera with the Investing News Network, and here with me today is William Adams of Fastmarkets. Will, thank you so much for joining me today.
Well, thank you for having me once again. It's really good to see you again.
All right, so we are here at the 15th Fastmarkets Lithium Supply and Battery Raw Materials event. What have been some of the major highlights for you so far?
I think to start with, the number of people, I think that's really impressive. Good growth from previous conferences, and so nice to see so many people and so many new faces as well. So that's been a highlight, but also just the area, the topics covered. So a lot of interest, a lot of sort of deep dives into it all. And, you know, it's interesting to see, especially with the IRA, sort of now we're in the US, the IRA actually, it puts an interesting spin on things as well. So it's sort of trying to hear people's views about that it has been really interesting. And always just, just catching up on other people's broader views about supply and demand and where they think prices are going.
So let's just talk specifically about what's been happening in 2023. We're currently in a very uncertain environment overall. How are macroeconomic factors impacting the lithium space?
Well, I think let's start with China on that. So obviously the end of last year, China had a big sort of, it came out of sort of COVID lockdown, or they abandoned the zero COVID policy. And soon after that, they then had a very big sort of COVID hit. And I think that sort of got although that was in sort of November, December, I think that got the year off to a sort of a slow start. But I also think coming out of lockdown for China after 3 hard years, I think it's also made households and people more cautious than they would have been sort of pre-COVID. And I think you've also had the end of subsidies. That's not a macro issue, but it's an issue. And I think that's all sort of pulled all that together has made the Chinese market a bit slower on the demand side. And I suppose on top of that, you also had sort of the Chinese property market has been weaker. And that's obviously a very important part of sort of the Chinese households, how sort of their prosperity and how they're feeling. So I think that slowed down on the demands, and that slowed the sort of the demand side. And then also in Europe, sort of on a macro geopolitical level, obviously fallout from last year with Russia's invasion of Ukraine, that affected the auto parts industry. Ukraine is quite a big manufacturer of auto parts, so that sort of slowed down the ability of European EV manufacturers to make EVs. So that's been another headwind on the demand side. And on, obviously at the end of last year, we saw with the prices we saw last year, it encouraged a lot of sort of lithium to come out of the woodwork, I think, whether it was DSO shipments from Africa or from Australia, but also, it encouraged more recycling. And I think, it just saw a surge in demand, a surge in supply, which also just happened to coincide with this slowdown in demand. And those two factors have really sort of led to a big sort of sell-off in prices. So from the highs in November last year to the lows we saw in April, we've seen prices fall between 50 and 70%. So it's been an interesting start to the year.
Definitely. So let's just talk a little bit about prices. As you said, we've seen prices turn to the upside in May after falling about 50-70% since November. Do you think they can go higher this year, or will they remain at current levels, all of the products, I guess?
Yeah, it's so we've seen a rebound off the lows we saw in April. I personally think we might go a slightly bit higher, but then we're going to probably meander sideways and sideways to possibly a bit lower as the market consolidates. I don't think prices are going to go back up to the highs we've seen. I do think we're going to consolidate probably for a while.
And when it comes to your lithium demand and supply forecast, has it changed since the start of the year?
I think things have been slower on both sides. So we've seen various sort of production ramp up delays and things like that. But likewise on the demand side, it's been slower. I think we do expect the demand side to pick up in the second half of the year. We're seeing some sort of early signs of that as well. And I think there is new production on the way, and it was on the way last year, and I think that will gradually sort of come through. So we are seeing an overall market in deficit, but it's generally going to be a tight market rather than a deficit, which is going to push prices that much higher, I think. And a lot will really depend on the level of restocking that's going on. So I think first quarter we saw quite a lot of destocking. We've just this sort of rebound we see now is sort of a bit of restocking coming in. But I think the market is going to be, it's going to be tight, but not as tight as we saw last year.
I also, of course, wanted to touch on the topic of what governments have been doing for the past year. They seem to be competing to get electric vehicle and battery manufacturing set up in their countries. We're seeing that with Tesla in Europe. Even now, I think Ford and SK On just announced they're getting a $9.2 billion loan to build battery plants in the US. Do you think mining will ever get that type of funding help or even attention?
I think it needs to. And I think as a result of that, it will. I mean, you can't just carry on building factories and EV things without having the upstream there as well. And the upstream, I think it's going to be multi-funded. So I think the government, and the government is sort of putting money into it. You're seeing sort of private equity going into it as well. And it's maybe one of the big surprising things is we haven't seen more of the traditional big miners who are into sort of base metals and things like that. Not many of them have really sort of come in and put their footprint into the sort of the lithium market. So I think we've got that to wait as well. I think we're going to see more M&A activity as well, which will help then sort of bring on some of these juniors as well. But yes, it definitely needs more investment, and that's across the market. It's certainly in lithium, certainly in graphite as well. So yeah.
All right, and let's just stay on the topic of supply for a minute. Do you think there tends to be an over-optimism when it comes to how fast supply can come on stream?
No, generally I think people are more and more aware that bringing new supply, there are a lot of challenges with that. And I think it's been proved again and again. No, I think that is sort of well understood. I think a lot of new supply is going to come on, and it needs to come on, but it will continue to face this sort of. It seems inherent in the market that it just does take time, and we're hearing quite often from people we're talking to that even you've obviously got labour shortages. You've also and key equipment. There are a lot more. Juniors trying to get in, and they're all trying to build up their sort of their processes, their production lines, and things like that. And so the lead time for the sort of key material, key equipment, is also going to be slow things down. So I think that's fairly well in the market, in people's views. Yes.
All right. Of course, I also wanted to talk to you about direct lithium extraction, which was a big topic here at the conference and has been grabbing attention from investors. How optimistic are you about DLE having a meaningful impact on new supply coming online faster than expected? And what would you say are the key challenges that remain for this technology?
Yeah, I think DLE has been talked about for many years, and it's always something which is going to happen. But I think, we certainly believe that DLE will work. It's certainly part of our long-term forecasts that we're expecting DLE. But it is getting a question of time. But I think we are getting closer and closer to the stage where we will see it. I think we're seeing more in China. I think but I think we certainly need it as well. But I think it's on its way.
And let's just also talk about the energy storage space. What trends are you seeing in this segment, and what do you think will it do for future demand for lithium from the energy storage space?
Yeah. Energy storage, ESS, is really important. And I think as we move, and there's been so much sort of momentum now to sort of move towards sort of zero carbon or carbon neutral, it's going to rely more and more on renewable energy. And most of that is going to be from either solar or from wind and solar. And that energy storage systems go hand in hand with that. So it's got a long way to go. It's starting off a very small base, but we actually feel that it's growing at a faster compound average growth rate than EV demand or EV sort of growth. So yeah, it's certainly watch this space, and it's going to be a big market.
Okay, my last question for you today, Will, is what other catalysts should investors interested in the lithium space watch out for in the second half of the year?
So I think we want to see more evidence and data supporting a recovery in demand, and I think that is going to be key. I think, from an investment point of view, I think we will see more M&A activity. I think we've seen some signs of that already. And I think that's an important part to help the whole sort of supply base keep up with what demand's going to be. I think when you get M&A activity, you get the sort of a broader share of knowledge, the knowledge base, and that's one of the key factors that people think. So if an existing miner, buys into a junior, then that there's sharing the knowledge there, and I think that's a really important thing as well.
All right, Will, thank you so much for joining me today.
Thank you.
Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.